Have you ever wanted to live off of your dividends? Well, that's something that we are pursuing. My wife and I are working towards building our financial independence. We are on our journey to reaching there in a matter of several years. And gradually, we are trying to put together the right steps that helps us get there faster. One of the ways that we are aiming towards that is by putting together a reliable financial plan and building a dividend stock portfolio, whether it's dividend stocks or sometimes more passively through investing in high quality dividend ETFs. I'm going to be showing in this video exactly how we are going about that and what are the stocks and ETFs that we plan to buy in the market in the week ahead. Let's get into it. All right, as you can see here on the screen, this is our stock investment portfolio consisting of mainly of our Canadian dividend paying stocks or ETFs. We have a number of other positions in US stocks as well as some other Canadian stocks or ETFs, but those are the ones that do not mainly pay any dividends. That's why we've really handpicked these ones. This is the portfolio that we are currently more heavily investing in and the plan to build it into a larger size. And I'm going to walk you through how this positions is doing and what are exactly our picks going to be in the stock market in the week ahead. Currently, given that I have already maxed out my contributions to my tax registered accounts, both of my tax-free savings account and registered retirement savings plan, RRSP, that we have here in Canada, I'm mainly focusing on adding to my positions in my non-registered accounts. And these portfolios that you see here, these positions that you see here are kind of scattered throughout our different accounts, whether it's tax-free accounts or registered retirement savings plan, as well as non-registered account. Our largest holding at this time by the market value is holdings in VDY. VDY is our Vanguard FTSE Canadian High Dividend ETF. It's, as the name suggests, is by Vanguard. We currently have 1,971 shares across our account, both between my wife and I, and its market value is currently sitting at a total of $80,811, or about 41% of this portfolio. This portfolio currently sits as a total invested amount of $207,612. Majority of our investments are in passive investment exchange traded funds, including VDY, VEQT, VFV, as well as some positions. You can see about 1% exposure to XEQT, XDIV, and ZEB. Then we have about 3% of this portfolio invested in a number of Canadian bank stocks. Noticeably, we have shares in Bank of Nova Scotia, Royal Bank of Canada, Toronto Dominion Bank, and Manulife Financial Corporation. I've indicated here, based on the number of shares that we currently have, how much dividend income annually we are expected to collect. You'd see the largest amount of dividend expected is coming from VDY. Currently, we are close to that $3,400 dividend income in 1 year. Following that, we have in dividend income from our shares in VEQT. We have 2,368 shares of VEQT. This is our holdings through our Smith Maneuver portfolio, and currently sitting at about 38% of the break of this portfolio exposure. We are expected to earn about $1,200 in dividend distributions through this holdings. It's paid usually once a year, and we are expected to collect that in the January of next year. VFV is another holdings. It's our third largest holding here, with about 30,000 plus exposure, or about 15% of our portfolio. We are expected to collect about $400 in terms of the dividend income per year from VFV. VFV does pay its dividend broken down in quarters, but VDY does pay its dividend on a monthly basis. That's why we love our exposure to VDY. And you notice our target exposure for VDY is to reach 65%, which is why VDY is one of those shares that we are actively and very aggressively buying, especially given that its share prices are currently hovering very close to its 52-week low price. If you look at it, the last trading price for VDY was at $41, which is hovering very close to its 52-week low price of $38.58. The highest price that in the past 1 year VDY had hit was $48. We're definitely way off to get to that 52-week high, which is why we want to bring our cost average down. For my account, my cost average for VDY is at $41.35, but my wife account, she's doing definitely better. Her cost average is actually at $40.40. So she's already seeing some positive profit for her account. We do have some shares of ZEB, which gives you exposure to all the Canadian banks included. These are the major Canadian banks altogether into one basket. We have 32 shares of that through my wife's account, which accounts for about 1% of our exposure. Aside from that, we do have shares of Canadian banks separately. These are through my account. I have exposure to different Canadian banks, handpick them. For me, I'm currently trying to add more to my positions in VDY because VDY, as a Vanguard FTSE Canadian high dividend stock, an ETF, in fact, does give me exposure already to the top Canadian banks. Financial sector, as you know, in Canada, is a very strong sector, and they are some of the best blue chips companies with high dividend payments. And I don't need really to handpick these stocks separately, and rather I can easily invest in VDY, get much more diversified exposure with a consistent monthly dividend payment to me. That's why I don't anticipate necessarily to go and buy shares of these stocks like the Canadian banks. I might want to perhaps take advantage of dollar cost averaging. Let's say for Bank of Nova Scotia, since I'm already at an 8% down for that, I might add to some of those shares, but that would be really the thought process. I would not probably be heavily investing and rather use that funds to invest in VDY. Before I jump into the exact picks that I'm going to have in the stock market in the week ahead, I want to quickly show you a little bit further details of this portfolio. You notice the dividend yield that we are getting from these different positions. They're showcased here, as well as the total estimated dividend in a year. That accounts to, at this time, around $5,500 in a year. That gives us an average up, if you divide it equally between the 12 months, gives us average dividend of $458.86 per month. Or if you divide it by the number of, say, 365 days, that gives us an average up $15 dividend per day. Not too bad when you look at it. This portfolio, if we don't touch it, we can expect to collect an average of $15 dividend per day. Obviously, we want to try to grow it to much larger position in terms of stock investment and ETF investment portfolio. Currently, we've put in around $208,000. In the week ahead, as I indicated, we are aggressively investing. So I'll be putting in another $5,000 into the stock market, mainly putting it into my non-registered account, my personal account, and trying to buy different shares that I'm going to discuss with you. Given the targets that we are showcasing here, it wouldn't probably be too much of a surprise for you that mainly my first pick in the week ahead in the stock market would be VDY. I would like to pick up much more shares of VDY. My strategy in many cases is that I try to, given how the stock market really is volatile and it's hard to really know where it's going to land, I'll try to pick a couple of shares on the market buy. In many cases, if the market opens low, I can take advantage of that. If the market opens up high and keeps going down, that's still okay, because I then have some limit buy orders at different prices. Typically, my limit buy orders, I look at the stock for the price, the stock price of the ETFs in the past week, and then try to pick something closer to those low prices that the stock had hit. So in this case, let's say if I look at VDY, the stock in the past week had hit even as low as $40 dollars, or even it might have, I'm not exactly sure, but I believe it might have even hit around $39. So I try to put different steps prices. I try to, for instance, say I'm going to pick up shares of VDY at the price of $40. Let's say I put order for 10. I put another one for $39.75 and put another 10. I put another around $40.70. Put different price orders and different price counts for it. And as the stock, the orders are getting fulfilled, that's how I get to increase my positions in the VDY and other shares. So VDY was my number one pick. Even though in terms of the targets, I want to reduce the target for VFE to 10%, and we're currently sitting at 15%. So by right, I shouldn't be buying VFE, but I want to still pick up some shares of VFE, because my goal is not to reach these targets that we have here overnight. I'm fine with us getting to these targets that we've set here, let's say over the next 6 to 12 months. That's totally fine. We want to take advantage of still low prices for VFE. VFE is that Vanguard S&P 500. As you know, the S&P 500 has done really poorly year to date, and we want to take advantage of that. In fact, if you look at the prices for VFE, which is in Canadian dollars, by the way, for investors in Canada, who wants to get exposure to US S&P 500. The last price of VFE is at $90.82, which is kind of a lot closer to its 52-week low price of $83.77, and definitely much more distance to that of its 52-week high price, which was at $109.47. You want to take advantage of that, pick more shares of VFE. VFE is my second pick for the week ahead. VEQT is the position that we have with our Smith maneuver. For those of you who are familiar and have watched some of our past videos, we get to increase our positions and investments in the Smith maneuver portfolio by about $1,000 every month. We do have some of the funds available in that account, and as a result, we are planning to buy more shares of VEQT and add to our existing positions and bring down our cost average, because that's our worst performing position at this time, down by about 13.4%. We want to really take advantage of that and buy more shares of VEQT. Lastly, if I have some additional funds, which most likely I would probably use that to buy a few shares of XDIV as well as a few shares of XEQT. Those are the two other stocks that I want to add, but it won't be drastically increasing them. Most likely, I want to definitely maintain that 1% exposure that we have to them. Most likely, I would be picking perhaps one or two shares of XEQT and maybe one or two shares of XDIV around that kind of range. I will definitely be providing you an update on this portfolio and what shares we've picked over the span of the next few days, most likely at the end of this week ahead, and we'll keep you posted how things are going. I'm curious to hear from you as well. Are you currently invested in any of these stocks in the stock market? Let us know in the comment section down below. As always, I hope you found this video beneficial and you gained something of value from it. I tried to walk you through my own stock investment portfolio that we are building, getting exposure to both passive and some active investing in dividend paying stocks, Canadian dividend paying stocks, and exchange traded funds, ETFs, and how we intend to build it into a much larger position, and how we plan to ultimately capitalize and rely on our dividend income that we are going to be gaining from this portfolio to really fund our life and be able to reach that level of financial independence. It's a plan that is on the go. It's not going to happen overnight. It requires its discipline and patience, as well as proper financial planning, which we are trying to do that. And this video is intended for us to share that, how we are envisioning that goal. I hope you found this beneficial. If you did enjoy this video and hopefully inspired you to also pursue financial independence, please don't forget to smash that like button. It really helps us a lot and helps the channel to grow so that we can reach out to much more broader audience who are passionate about the topic of investing, saving, and financial independence. Also, don't forget to subscribe to our channel. Here on Moementum Finance, we post every week several videos about investing, whether it's investing in dividend stocks, growth stock, penny stocks, as well as ways to reach financial independence. My name is Mo, and I hope to see you all next time.